All right, everybody, welcome back to another video here on Financial Friends. Today, we are going to be discussing the dividend journey, the new stock that I've added, a small portfolio update at the end, and that's about it. So, without further ado, the title, maybe the thumbnail, probably not. I probably clickbaited you into this video, but you could see it right here. The stock that we have added to the portfolio is none other than John Deere. So, in this video, we are going to discuss everything that I have to know or that I've kind of researched over the past couple of days on John Deere, why I decided to invest in John Deere, what the purpose of this investment is, how it plays a role in our portfolio, and all of the above. So if you're new here and if you're like, what in the world is going on? This is Financial Friends. This is the dividend journey. I am covering my own building of a portfolio right here in front of everybody live on YouTube. So without further ado, let's go ahead and just dive right into why this investment was made in the first place. And it was kind of sparked, unfortunately, by everything that is going on overseas and the absolute craziness. And I kind of thought to myself, and it had been discussed in the news, like, made in America, right? Let's try and do everything here in America. Well, what are we going to do if we need to do more things in America? We're going to build stuff. So, naturally, I looked into Caterpillar. And I noticed that they have a pretty big chunk of market share. Obviously, when you're driving down the road, you see a ton of Caterpillar vehicles. But I noticed something when I was driving to my girlfriend's house, and that was that there was a ton of John Deere stuff outside too. And being from Michigan, I've seen farms, I've been around agriculture my whole life. I've driven and seen places that are completely ran by agriculture. And so I naturally thought, well, John Deere might be a pretty good investment too. Looked up their market share, and lo and behold, 4.7% of the market share. Now, the grand scheme of things, is that a lot? No. But Caterpillar is purely focused on construction equipment, and they only have 13% market share. John Deere has, let's just round up to 5, so a little under double the market share as Caterpillar. And that kind of got me thinking, so I decided to see, well, how much of John Deere's business is construction? And it's only 11% of their business. So 11% of business makes up 4.7% of market share compared to almost a whole business driven by construction and Caterpillar, and they only make up 13.7. So naturally, I decided, let's go ahead and dive more into John Deere, the company, and we're going to take a look at more about John Deere. So I looked up more, went to their investor relations page, and found this, that they see that the addressable market opportunity can continue to grow. They have goals to continue to reach more people and more acres in their production and precision agriculture businesses. They're going to want to reach more people, produce more, and make sure that their vehicles are tech focused. That's something to me that's very, very big. In a world where we're moving away from gas-powered vehicles, we're always going to need to continue to grow food and innovate in a space that historically has not been dominated by what we know today as technology. We think of technology as phones, as tablets, as what you're watching this video on right now, but really, technology is anything that innovates. At one point, this was technology. We innovated with a pencil. This is also technology, but so are the things that you're looking at on your screen. The way that the food industry, right, the agriculture business has been ran has been with technology and things that were developed a long time ago. Still technology, but now we're introducing today's technology, making things connected, allowing for easier turns and sharper turns, right? More yield on product or on, crop because we're able to get tighter turns and, whatever it might be. There's technology that can be integrated into all of these, and then even like we said, the technology we know today, like phones and screens and better controls and automation and potentially AI built into these types of things. So there's a lot that John Deere can do, and I'm excited by all of these. Now, I'm not going to go over all of them. I'm not going to lie to you. I don't understand everything about the business, nor did I read every single word on this page, but what I do know is there's a drive and a focus, and I did go over these top parts. Obviously, the sustainability and stuff is something that a lot of these companies are doing. Some of it is for show. Some of it is because they truly care and want to make the world a better place. This is probably a really good mix between the two. Obviously, being an agriculture business, you want things to stay sustainable, right? So, again, innovation, pushing the limits, continuing to grow. I'm going to see if I can make myself a bit smaller here. or just move myself out of the way. They're building on top of things. Their technology stack, as they call it, is building. So it starts with that hardware and software, right? The things that they're putting out into the field. Then they're helping guide those things, both literally through turn automation, automation path, and some other things they've introduced. Now you're going to connect the things and provide digital solutions to people who are looking to have these, right? Farmers and agriculture is becoming more tech focused because tech allows them to make more money. Automation and machine IQ coming next. Can we have things be done by themselves, not have to keep farmers out in the fields all the time? And then autonomy. Can we create autonomous vehicles, things where agriculture can be ran by literal robots, but our robots, right? And so I continue to push on and push forward, and as you can see, there is a focus on innovation. This is crucial in both construction, in forestry, in agriculture, in all of it, right? There is a focus on innovating this space, a space, again, historically that has not truly been innovated in a long time. And by innovated, I mean with this type of technology, right? There's been innovations and steps forward in new technology, but not in this way. Again, they have diversification, right? They aren't, I just mentioned again, in turf, in production and precision agriculture, in construction and forestry, the things that are listed here, they're not just a single business. Again, we can go back to this image here. 8% of their revenue is generated from financial products, ways that they've given loans or, allowed people to pay for their vehicles, maybe rent their vehicles, whatever it might be. It's not single. 37% is agriculture. The other 20% is the small agriculture. So over 57% of the business, or 57% rather, is agriculture based. But then there's 3% forestry, 9% road building, 3% compact construction, 11% construction, and 6% turf. It's not just one business. It's diversified. And it's diversified among the type of things that they're producing for people. Corn and soy products, small grain, sugarcane, you can read the rest. They are not handcuffed if construction stops. And really, construction is a small part of their business. Agriculture is never going to stop. Ever. We need to eat. We constantly need apples or bread or sweets, right? Ice cream, things to sweeten. We constantly need t-shirts, corn, high fructose corn syrup, right? There's never going to be a time where we say, oh, no, we just don't need food anymore. We're done. Unless we're all just get injected with IVs or something. That's off topic. Anyway, so there's diversification. So they have diversification amongst the type of products or equipment they can sell. Here you can see agriculture. Someone like me might purchase a lawn and garden vehicle. A construction worker or team or company might purchase construction things. And you have landscaping, which is done at schools. It's done at every single business known to man. It's done at baseball fields and football fields and outside of basketball and hockey stadiums, rinks, etc. Golf, the whole entire field, the whole entire playing field, I should say, the whole course is grass. They got to cut it, right? Forestry, knocking down trees, clearing land to build new trees, whatever it is. Also the engines and the drivetrains that drive these type of things. Government and military sales, not something that I've personally looked at as a part of their business, maybe something I should dive into more. But again, diversified. That's really the thing here is this business is not just construction. It's not just agriculture. It's a mix between that and a few other things as well. So clearly we then want to see, right, is the business financially stable? Yes, they do all these things, but do they make money doing it? Do they stay profitable doing it? And the answer to that is yes. Now, there are some ups and downs and left and rights, and I dove into the financials. I didn't do every single piece of research I could possibly do. I'm not perfect. Nobody's perfect. The people that do that have a lot more time on their hands. I'm building a portfolio from the ground up with flexibility to change at any point, and I'm young. So I have opportunity to pay a premium, average down in positions, and take a little bit more risk. So please do everything at your own risk and with your own research. This, however, is the last couple of years of research. It's not everything. I dove into the more full picture. But again, revenue was 38, and you're going to see here everything was good in 2019, right? Dropped a little bit in 2020, obviously, and went up again in 2021. So revenue 38.94. Up to 35.26, and then 43.58. This is in billion. Again, I expect that these numbers over to 2030, 2035, 2040, 2050 can continue to grow. Why? Well, there's going to be innovation in the space. Hopefully these products can become cheaper. Maybe they can move more volume. Agriculture as a market, we will touch on this in a second up here, is going to continue to grow. The balance sheet looks good. Total assets, total liabilities. Obviously, you don't want to be more liable than you are asset heavy, and they're not. Okay, 62, 62, 65, and 61. So they're actually decreasing liabilities and increasing kind of assets. This is obviously Q1 2022 numbers. So yeah, take that for what it's worth. Cash and cash equivalents. They have cash on hand. That's good to see. And free cash flow was negative in 2019, but is continuing to grow here in 2020, 4.83, and then 5.15 billion in 2021. Those are the quick numbers. Obviously, like I said, a ton more to dive into. However, main picture here, they're addressing growing markets. This article here, and I probably will try to link these things down below, they see a compound annual growth rate of the construction equipment industry by 6.23%. Now, is John Deere going to capture all of that? More than likely, no. Are they going to be a part of it? Yes. They see this industry continuing to grow by 2027. And the bigger thing of the two here is that I'm reading this predecessor or whatever that word is, research. Agriculture equipment market size will grow. And this is the market, this is the sector that they are a part of, right? Reasons for this: rising pressure on food supply, growing demand for agriculture crops, increased government initiatives to develop this sector, disadvantage associated with extensive use of labor in agriculture, so they're trying to continue, right, to make things a little bit more automated. Growing awareness regarding the use of this equipment, increased mechanization of the agriculture field, so right, increasing the amount of machinery that we're actually really using, and the growing popularity of automatic equipment, which is a market that they do address and are trying to innovate and become a part of. We're here now, right? 2022. They expect the size of this to go from $117 billion a year all the way up to $168 billion a year in just about 8 years. Hopefully that can continue to grow or even outpace that. I'm not betting on it. I just want to be a part of it. This is going to be a smaller part of my portfolio. Continuing to move on a little bit more with the financial sides of things, you can tell here from 2020 to 2021, a bit easier comps. So 2020 wasn't necessarily a poor year for them, right? Down from even 2019. So these are easy comparisons, but they still are showing growth in multiple different market segments. US and Canada, Western Europe, Central Europe, Latin America, and the rest of the world. They're consistently investing in research and development. This is crucial when you're trying to innovate and create new technology. Skipping past a few things here, we could see that cash flow, right? This is quarter to quarter, but this is all the way back from 2001, is not necessarily stable, but is an upward sloping line. That's what we like to see. And the use of cash, they're committed to managing their balance sheet, keeping a good rating amongst investors, paying back bonds, things like that. Fund operating and growth. They want to grow the business. They're not just focused on stagnating and serving the same people they've always served. Common stock dividend, they're focused on continuing to keep a 25 to 35% payout ratio. And they're also looking to buy back shares then after all of those other things have been met, which is good to see. You can see that they are returning, right, in the form of both share buybacks and dividends, ending with cash and cash equivalents, which is, again, what we like to see. They have continued to grow their dividend, not every single year. You can see here from about mid-2014 to 2018, they did not grow that. However, this is back from 2004 when it was 11 cents, and it's grown to $1.05. Hopefully, we can continue to see growth over the coming years. We're not investing right now because we're getting a massive yield. We're investing now in expectation of a larger yield further down the road with price appreciation. That's about all I have on that. Now, the moment that you've been waiting for, what exactly did we do and how does this play a role in the portfolio? Let's dive into that. First things first, I want to say that we did receive a dividend from SCHD. However, I will not be updating the position. Reason being, we have 2.1 2.132 shares. We now have 2.146, so a small increase. However, Fidelity has not averaged out our new average price on the stock, so I'm not going to update it yet. However, that will be updated next episode. We are, however, going to be adding a stock to the portfolio, obviously what we just got done talking about in John Deere. So let's go ahead and add that. Ticker symbol is DE, or Deere and Company. Number of shares purchased is a measly 0.058. That is $25 worth, if you were wondering. And we got an average price of $430.17. We did see a little bit of price appreciation today, which is always cool. We'll go ahead and zoom out to the portfolio over the last 3 months. Again, you can see that growth. But here we have the position as a 0.89 dividend yield as of current, and it's going to be paying us 23 cents in annual income. Now, this stock is not completely built out, or the position rather. You could see based on holding that we have SCHD at 33%, 14.45% FISROX, 10.62% real estate or O, about 10% Apple, 9.5% J&J, about 8.85% Waste Management, and 8.77% 3M, which leaves us with almost 5% John Deere, right? So not the whole portfolio. What will be happening as a result of this is we will be holding our 50% ETF allocation. So these two things here, index fund and ETF, will stay about 50%. We're a little under that right now. We're going to keep real estate for the time being at 10%, and our individual stock holdings will decrease to about 8% per position. So we'll be looking to increase John Deere position just a little bit, and then increasing our O, FISROX, and SCHD positions to kind of naturally push down these allocations here. Then we will continue to go from there. This purchase of John Deere has diversified our portfolio just a little bit. Technically, we are heavily in the industrial section. This, again, being another industrial add to the portfolio, but industry-wise, it increases us out to machinery, which is something we were not a part of before. Leave a comment down below if you think that this stock was a good add. If you think I messed up, let me know down below. If you think I should add a different stock, let me know that too. If you enjoyed the video, please go ahead and hit that like button. And if you are not a part of the friend group already, consider subscribing. I think 75% of viewers or so are not subscribed. So if you're watching this and you want to see more content like this, go ahead and hit that subscribe button. You'll be notified every single time a video comes out if you hit the bell right next to it after you do so. Thank you very much for watching this video. I hope that you learned something. Hope that you can take something away from this. And I will see you all in the next one. Take care.